Hello traders, hello everyone, my name is Gregor and welcome to our new video analysis surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at New Zealand dollar, gold, silver, S&P 500 and the euro yen. Now, as you know, the US dollar has come to the upside recently as a safe haven approach from investors after stock sell-off because of some issues in China. Then you have also Fed, which could give us a new hint about potential tapering, and this could be another reason for strong US dollar. However, I'm looking at some of the currencies, if maybe this risk off flow will change into a risk on because of potential turnaround Tuesday after recent sell-offs, then I think that it's worth to keep an eye on some currencies which are doing quite well versus the US dollar, and this can be New Zealand dollar, which can be supportive also if we consider potential rate hike in the future. So if we take a look here on this pair from an Elliott wave perspective, we are seeing a deep complex correction, very nice support here at 67.87 area when you look back from 12 months back, actually from last year. So we were seeing a very nice reversal away from that support. So in my opinion, there is a chance for more upside. Looking at the 4-hour chart here on the right, you can see that recovery from that support was a very strong one, a very sharp price action, which looks like an impulse, while we have the current drop in three waves. So I think that we could see more upside. There is also a triangle pivot right there if you look back here from this wave B consolidation. Then you have this 50 and 61.8%. So ideally we will see a bounce here, but for confirmation, what I would want to see is obviously a rise above 70-80 area. A daily close above that would make an overlap with the previous consolidation. That would make very nice indication that this market wants to continue higher. Another market which could be supportive for commodity currencies could be also gold. Now, firstly, looking at gold, and what is interesting about this is that we have seen quite sideways price action despite strong sell-off on silver. So when I'm looking at gold here, I think that this is consolidation on the way up, and that sooner or later this one-year consolidation will be over. Ideally, that's going to be a triangle in a wave 4. Here I'm looking for wave D right now. Sub-wave D is underway, so watch out for potential continuation towards the upper side of this range. And why I think that this trend line could be retested is because if you look closely here on the 4-hour chart, notice that I can count 5 waves up from that spike low. Okay, if we assume that's a wave C, and then this first 5 waves up is still only first leg, wave A, of a 3-wave rise here for wave D. Because each leg in a triangle formation should be structured by 3 wave, because 3-wave move, because it's corrective movement in nature. So in my opinion, there's a chance, very nice chance actually, for this bounce, but maybe tomorrow after Fed. So we will see how investors and traders will respond to this event. But if we see a recovery above 1782 level, then this overlap would invalidate any bearish interpretations. So in such case, I would be even more bullish here on metal, and this means that commodity currencies, maybe even Aussie, could see some upside. Now, looking at the silver here, a long-term chart shows potentially corrective movement now towards the lower side of this range. You have some very nice support here around $20, $21, even better. Looking at the daily chart, I'm tracking and observing this consolidation from last year highs as a flat formation. So you have this 3-wave drop for a wave A, and then you have this complex corrective overlapping recovery for wave B, which moves just slightly to a new high, which is very typical and common for B waves. And this similar price action, just temporary move beyond this swing lows or swing highs can also occur in wave C here at this wave A level around 21.65. So once again, this appears to be a very nice potential support zone. You also have this ending diagonal maybe forming for a wave C, or even if you're just observing the idea of a wedge pattern based on basic technical analysis, that's still something you would look for a potential bounce. But of course, wedge patterns are not completed until you see, or trend is not reversed, until you see a response from that lower trend line of this wedge. And then you also need to see this broken upper trend line to make this bullish here on silver. Okay, but I think that these some support levels are definitely very interesting here on silver, especially when looking at this longer term pattern away from these 2020 lows when we had this first leg recovering in 5 waves. Now let's take a look also on the S&P 500. Now stocks has came to the downside recently, and looks like that this market is tapping into a new corrective formation. I've been looking for this potential reversal to be a wave 4, and I believe that we are in the middle of this setback. So that was wave 1, you had a wave 2, wave 3, and now you are in a wave 4. Very nice support is here around 42,000 4,200, sorry, where you have also this trend line connected here from September 2020, and then this swing low from November of last year. So that could potentially limit the weakness here in this wave 4. On the 4-hour chart, why I think that this is still an ongoing consolidation for wave 4 is because this was quite sharp drop. I know that some would say that maybe this was a free wave movement, but even in such case, the sharp sell-offs, the first leg from the highs, or in downtrend from the lows, normally indicates that this is just only first leg of a higher degree structure. Maybe if it will unfold as a flat, maybe even as a still as a deep free wave ABC structure, but in either case, I think that this resistance here at the previous consolidation area should be observed very closely at 44.30 up to 44.90 area. Okay, so maybe in the short term we could see some kind of a recovery here, but then just be aware of another sell-off here to complete this wave 4 at lower prices, as long the market of course is trading beneath this level. Now for now, when we are here in risk-off mode, when we anticipate more weakness after this potential, as I said earlier, turnaround Tuesday for a wave B, I think that Euro-Yen then could see more damage. Why I bring on Euro-Yen is because this has been one of the weakest yen crosses. Okay, so in risk-off situation, I definitely want to focus on the markets which are the weakest, because yen crosses will mostly be driven down by by lower stock prices. So what I'm looking at here is observing potential wave 4 consolidation, but still it's incomplete. Why I think that is because the recent sell-off that we are seeing away from that September highs is actually a very strong one. It looks like an ongoing impulse, and I cannot count 5 waves down just yet. It looks like that we are now consolidating. So this consolidation in a wave 4 could be very similar to consolidation on the S&P 500 when we are tracking wave B rally. So once the S&P 500 moves into that resistance area that I highlighted earlier, that's when I would anticipate more weakness here on Euro-Yen. So watch out for potential resistance on Euro-Yen here around 129. And then, of course, I'm looking for a sell-off beneath these August levels before this market could potentially stabilize. Okay. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you next time. Bye.